Hello, everyone. This is Adam Meister, the Bitcoin Meister, the Disrupt Meister. Welcome to This Week in Bitcoin. Today is December the 15th, 2017. Buy and hold. Strong hand. All right, we've got a really exciting show. And good morning, Asia and Australia. It's already Saturday there. And this show is especially for them because we have guests coming from Asia and Australia. You are familiar with both of these guys. We've got Simon Dixon coming from Hong Kong. Oh, yeah. And we've got the FundiAU coming from warm and lovely, one of my favorite cities in the world, Perth, Australia. So let us start this show off with Simon. He's always got a lot to say about the current Bitcoin situation. What do you feel like we should start off talking about here with Simon? What's a big story you want to talk about?
Me?
Yeah.
Okay. Well, I mean, maybe let's just do a general overview of where we are since we last spoke. So I think when we last spoke, we were in the midst of Bitcoin Cash becoming a thing. So it just it had a big pump on the Korean exchanges, and I think it was the weekend where there was a lot of panic and some organized, some organized, what I would call it manipulation of the markets in order to try and drive people into thinking that Bitcoin was about to fail and Bitcoin Cash was about to take over. Since then, we've just seen just an incredible rebound. We've seen an immense amount of volume enter the crypto markets in general. We've seen Bitcoin approach record highs, and it looks like we're approaching for the end of the year as we enter into the holiday seasons, somewhere around $20,000 Bitcoin, which is, for me, it's a little bit scary because I like to see markets move a little bit slower, a little bit rationalized. But now we've passed over $500 billion of market cap. Now, I remember all the criticisms over the years that people used to give. There's not enough liquidity, and every year now we just seem to be every objection that's been thrown at Bitcoin is kind of Bitcoin's just passing through it all. So it's just amazing to see right now. I wake up every morning with two words on that seem to summarize every day, and that's excitement and overwhelm. I don't know if everyone else is experiencing the same thing, but every single day, I'm just getting people that want to contact me that knew, oh yeah, that's that thing that Simon was talking about, a long time ago, and all of a sudden they're all crypto traders. They're all asking what altcoins to buy. My answer's always been the same, that Bitcoin's the only thing that you should start with. Learn how Bitcoin works, learn what it's like to earn your own money, spend your own money, and have a deflationary monetary policy. And then once you've learned, the first step, most people go to Coinbase or something to buy some Bitcoin. And then as soon as you've gone to Coinbase, you've got to learn how to actually store it yourself and get a hardware wallet and learn the power of actually being in control of your own finance. A lot of people, I guess, never get past that phase. They buy on Coinbase or then they hit the exchange and suddenly they're becoming altcoin traders. Their next question is, oh, what's better value than Bitcoin? What should I be buying? So there's a speculative frenzy at the moment. Which does mean that at some point, there's going to be a correction, and then all these people that never really understood crypto in the first place, don't have a good understanding, will be the first to sell. But fortunately, we're in a situation where Wall Street has now opened up the marketing machine. They created a futures market. They told the world that Bitcoin is an asset that everybody should be interested in. And after the institutions start playing around with a bit of futures trading, I think the institutions are going to learn the power of not having to rely on someone else for custody of their assets. So we've just opened up this ginormous marketing machine. I think it's very ironic that over the years, talking of Australia, the last time I spoke in Australia, if you look up a presentation where I was saying a bank, it was presented to a lot of banks, and I was filling them on the history of Bitcoin prior to the word blockchain becoming their pet word. And it was, I think the title of the video was that Bitcoin is the technology behind blockchain, because you often get blockchain, the technology behind Bitcoin. So I was trying to explain that and fill them in last time I was in Australia. But I find it very, very ironic that for all these years, the banks and financial institutions have been trying to put Bitcoin on the back burner, pitch this concept called blockchain, say we hate Bitcoin, but we love blockchain. And yet the first application after years and years and years of banks saying they're going to change everything with blockchain, the first application that people actually use that actually gets traction is, guess what? Bitcoin trading. So now they're realizing that blockchain is, not necessarily what they thought it might be. They've all decided to build some new centralized databases that they're going to connect together. All of a sudden, the CEOs is more interested in things that the CTO is telling them, this doesn't really help us that much. And yet the first application that they popularize is Bitcoin trading. So now, all of the markets around the world are realizing, Jesus, this is a really popular new asset class that's emerging. There's money to be made. And so now the new wave is that all the financial institutions and all and all of Wall Street is now going out there promoting Bitcoin, realizing if you can't beat them, join them, creating their own products. And now we're about to enter the next phase into 2018, where Wall Street decides, okay, we need some retail-based products. These futures are a bit too complicated for people. And right now, we're at a very critical point, because I feel that we're in the midst of a bit of a corporate takeover of Bitcoin. I feel that the community has been so busy arguing with each other over the last few years about how to scale Bitcoin, that now the banks are ready to come in and offer all the products, and most people are going to be. It doesn't fear me too much, because I know that at some point these large financial institutions, they're going to create products that allow people to get into Bitcoin easy. But also these banks are also, still have systemic risks. They still have structural problems. We haven't solved anything from the beginning of the financial crisis in 2007, about a decade ago now. And so there's still systemic risk in these systems. And so people still will learn the lesson. Just like if I rewind this back, this is so similar but very different to what we experienced in 2012, when everyone was kind of, and then, I guess 70% of all Bitcoins ended up on Mt. Gox. Mt. Gox got hacked, and Mt. Gox turned to be problematic. And then everyone learned the lesson that they should own their own Bitcoin. So I think we're going to see a similar thing, but this time it's going to be a grown-up version and a much larger version, where all the newbies are going to be entering into these, the institutions are looking at the futures projects. Wall Street are realizing we're getting record volume here over any of our futures. This is a product that's capturing the imagination of the entire world. And then they're going to start, building retail-based products and ETFs, and introduce counterparty risk into a zero counterparty risk protocol. And then these people with this ginormous marketing machine that's coming from this, mainly centered around price, speculation, futures, and Wall Street, will end up with a load of people realizing that they need to take those Bitcoins, they need to own their own private keys. You look at Trezor and Ledger, their orders are going absolutely explosive through the roof. They can't ship enough hardware wallets, which is a great sign. So that's what's more interesting to me. How many hardware wallets are being shipped versus how many people are signing up to exchanges? I'd love to have some kind of matrix of how many people are leaving their coins on exchanges versus how many are putting it on hardware wallets, because I see the hardware wallets as the ultimate adoption. So when people own their own Bitcoin, that's when we are getting where we are. And that's growing at a very fast rate. But my fear is a bit too much of this new volume is sitting on exchanges, ready to jump into the next altcoin and or whatever it is. So we're in a bit of a speculative frenzy, which means that when we will get a correction at some point, but with every correction, we'll get significant progress and people move into hardware wallets and shaking out the weak hands. Adam's always talked about the strong hands. We hear about, we're here trying to get the strong hand adoption so that throughout 2018 we'll get a lot of that. I think in 2019 people will learn the lesson, and then 2020 we enter into halving and we start a whole new phase of innovation and whatever's next from there.
Wow, that was a totally awesome summary of what's going on. And you brought up something, and I'm gonna probably make a show about this in the future. How many hardware wallets are being shipped? This is a great measure of what is going on, and something people have not really talked about. And compare that to, we do talk about how many accounts are being opened at Coinbase, but what really is more important is how many people are learning and progressing and becoming true veterans and getting these hardware wallets and being responsible. You and I were just in Korea, and I'll ask you about this in a second. But what I've heard is that most people in Korea, they just keep their coins on an exchange, and they're cruising for a bruising over there. I mean, they're asking for some trouble. But I also want to thank Tor over in the super chat. Thank you very much for that. You rock, man. Pound that like button, everybody, and have a strong hand. Nathan, a lot was just said, or the FundiAU. That's his name. I know the dude personally from Perth. I call him by his real name, but he is the FundiAU. What do you have to say about what Simon just brought up? A lot of things. Do you have any commentary on all that?
I only just grabbed my pen in the last section and tried to quickly jot down a couple of notes. Starting off with the price moves that were mentioned. The day that, it was the second day after we hit the $16,000 US mark. I walked into work, and I kind of felt like a bit of a rock star. Not that anything was different that day, but I walked onto the flight deck and one of the doctors was like, oh man, did you see the price moves? Oh, I can't believe I didn't buy it when you told me to. This is back in August when we were sitting around $5,000-6,000 or whatever. No, actually it would have been like June-ish. And then one of the other nurses, when I came out onto the floor, was like, oh man, can you believe this? Because he was like, oh, it won't break $8,000. And I was like, if it breaks $8,000, you owe me a coffee. So I get a free coffee. So that's awesome. As far as the adoption in the banks, that's I find that a really interesting one. From an individual level, we might find people more willing to take on the risk themselves. Well, not the risk really, but the management of the funds themselves, pulling things onto hardware wallets. Well, I think you might end up finding that a large percentage of the holders inside a banking system are those who are used to dealing with it on a business level. So you'll probably find a lot of those businesses end up holding it on the exchange of the current time or whatever, so the banks. And they put themselves at risk more. But it's a question whether the dollar value is going to be held there or on the hardware wallets where it's safer. And I definitely agree with that. The metric of who owns things on hardware wallets versus not on hardware wallets. I know on one of the group chats that I was on, a lot more people, percentage-wise, are starting to hold hardware wallets, and I'm seeing people, oh yeah, I'm ordering several, who wants in type of thing. And that way you're sort of getting a group effect. But I think it's once you've been in it for a couple of months and once you're more comfortable with the system and once you're no longer, I need to trade every day type thing, it's those people that are in it for a quick buck by trading that are going to be holding that.
Yeah, a comment on that. I think is I know people that were here in 2011, and they're not incredibly wealthy. And the reason they're not incredibly wealthy is because they spent the last 7 years trading. And the people that didn't trade are incredibly wealthy right now. And at Bank to the Future, we only deal with accredited high net worth investors. there is an incredible amount of accredited high net worth investors that have come from this sector now. You know, we've been through verifying, you know, a couple of accounts a day to verifying thousands of accounts each day, or each week rather. You know, and that's testament to this. And so my observation now, while there may be a load of people that have called all the right ICOs and called all the right altcoins and sat through this, but the people that are really wealthy didn't do too much trading. They just sat there. And so I think it's you know, it's an interesting observation that humans have this desire to want to. I think it's a psychological thing where they feel like they have to earn their money, so they want to spend time, you know, doing things which actually makes them earn their money. Whereas if they just didn't do anything and they earn money, you know, humans feel a little bit weird because it's kind of ingrained in our brain to think that way. So I think this leads to people wanting to overtrade, and then also just you know, the human observation that I guess we always look for value and we always look for things which are a bargain, and that's driving people into thinking that Bitcoin's too expensive, even though that's a very irrational, strange concept. And so they're looking for the cheaper thing. And so many people as well, when I did my tour across China with Jim Rogers, so many people thought you had to buy a Bitcoin to get in. And they didn't realize that you could buy $100 worth of Bitcoin or a few, you know, a few renminbi worth of Bitcoin. So these seem to be these three psychological things that are driving people into altcoin speculation. And some of them are doing, you know, some of them are doing well. I mean, everyone's doing well in a bull market like this. But what's really important is how people come out during the bear market. And you know, between we had a year and a half bear market in Bitcoin. And that was a very promising, rewarding, very innovative time for Bitcoin because it shook out the non-believers and left the believers really, really coding away and developing away. So I do actually look forward to another bear market. The interesting thing is there's so much new money to enter this space. So every time you do enter, you know, a shakedown because of some reason that fears people into selling their Bitcoin, you know, that institutions, every single fund manager in the world needs to have Bitcoin in their portfolio, and because they need an uncorrelated asset, whether they believe it or not. So you just got this tremendous buy walls and sucking up of Bitcoins that come along from that. And then that drives more volume into the altcoins and other speculations as they take a percentage of those and get more speculative with them. But my fear is the ones that are coming in, you know, they're coming in through Coinbase. They wanted to buy Bitcoin. They end up buying Litecoin. They do incredibly well because of the bull market, because it like doubles or triples in price. And then they go straight into ICOs and they never actually get to Bitcoin in the end. Then they lose their money, and then they, you know, because we enter into a correction or a bear market, and they say, oh, that crypto stuff was all a scam anyway.
Yep, you just went through a scenario that will probably play out. I'm glad everyone is noticing this phenomenon now, that there are all these people on this planet that think they have to buy one whole Bitcoin. They think of it as an entire stock. I mean, that's what in Korea they were telling me the same thing. Why not bring up Korea right now? Simon, tell us what you thought of Korea when you were there. Were there any observations that just popped out at you?
So Korea is just an absolute feeding frenzy of speculation. You know, we just saw right now EOS hit Bithumb, and then suddenly it's up like to $8 odd after spending most of the year at like $1.50 or something. And so it's just becoming a real big pattern. Korea's a little bit scary because the behavior that's going on in Korea is exactly the type of thing the government doesn't want. And so I imagine Korea to be the next China, although we have, you know, we have seen Korea kind of deciding what they want to do with this. They recognize that there's a lot of economic activity here. You know, if they do what China did, then all the jobs go to Japan, or they all go to, you know, Singapore, where in Japan and Singapore, they are actually building stuff. They're using this technology to build a lot of stuff. In China and Korea, they were just using it for speculation. a lot more. Although, you know, China had obviously the very buoyant mining industry, which was adding a lot of value to the network as well. But in Korea, I would guess, you know, I've got nothing to base this upon, but just from meeting people, my guess is that 90% of all the money there is sat on exchanges, and they're all looking to accumulate more Korean won. This is just a tool to accumulate Korean won. But I'm okay with that, because I think after you accumulate a lot of Korean won through this speculation, or if you don't, if it goes wrong, a percentage of those will go on, and, you know, it's kind of like China. When the ban happened, a percentage of them just disappear and say, okay, this is over. But you see the die-hard people that reincorporate, you know, use companies in Japan and Singapore and Hong Kong, and then they, no matter what happens, they just won't go away, you know. And there's a percentage that come through, and I think we're just on a really nice adoption curve. You know, I guess just like with Facebook, when that first came around, there was probably a load of people that just signed up to get a date or something like that. And then when they didn't get a date, or something really strange happened, they just left. And then eventually all people started using it because it had some kind of utility for them. And I think we're going to see the same. I think it's ignorant to think that not price and speculation isn't a key driver of our market. It certainly is a key driver, but I think after all the price and speculation, then you get people that want to use this for adoption. And when they use it for adoption, they add value to the network, they create new user cases. And when new user cases come along, it drives the price, which enters the next wave of speculation. And we just have this cycle all the way through to adoption, until eventually you hit the big one, which is when your country has some kind of systemic risk in its banking system. And then you realize the value of owning your own money, being able to spend your own money, and the power of a deflationary money supply that's independent of government and politics. Well, it's not independent, but it doesn't depend on what your national government wants for your country. And so it's just a really nice feedback loop. It's okay. I come to terms with it. Speculation at the end of it will drive adoption. So yeah, it is what it is.
It definitely is what it is in South Korea. It is a nation of day traders, I'd say. They don't care what altcoin they're buying, as long as it's pumping and they can make money off of it. I mean, they were all into IOTA also that week that we were both there. I missed Simon by a day, by the way, everyone, in Korea. We missed, he left the Seoul the day I got to Seoul, but hey, man, that's how it works. The FundiAU, obviously, we just said a bunch of other information was just given out. You probably have some comments on that, but also tell us what's up in Australia in terms of the news of, because people are wondering what's going on down there too.
Yeah, no worries. In regards to the network, and speculation cycle, what was I going to say there? Oh yeah, it's just it's an interesting thought, because the underpinning mining fee was where it dropped to last time when it did the $1,000 down to $25. And that price right now is sitting in a couple of $1,000s anyway. So it's, yeah, if it was to go totally bear market like that. But the actual bear markets haven't been that bad for Bitcoin. I mean, it's a couple of percent. I mean, when I got in, it peaked at 400, then came back down to like 300. So it's a fair percentage, but it's, for us who've been in it for more than 6 months, you know, anyone in it more than 6 months, that's tolerable, except for those who are panicking and I need to sell, I need to buy, I need to do something with my coins.
Well, the big bear market was the Mt. Gox one. So Mt. Gox pumped it to 1,250, and then we hit a low of $250 a year and a half later. And then ironically, the Silk Road closure was the thing that actually peaked the bull market. So, and then we entered in, we've been in a bull market ever since.
Yeah.
Continue, Nathan, what you were saying before.
Anyway. No, that's all right. That's all right. Sorry, I just thinking for a second the internet slowed down. And then in regards to Australia, I've also seen a couple of people that are new into it being like, I just want to buy, what was it? I want to put $250 on Ripple or something like that. But you know, it's, if you're not going to actually play with the technology and move things, you're not going to get a feel of what it can do. So you're not going to get an appreciation of it if you're not going to move the coins and hold the coins yourself. And Ripple doesn't encourage you in any way to hold the coins yourself. I mean, it's reversible. It's not what the rest of the, even the rest of the normal crypto world stands for. It's just kind of funny. And then also Australia's recently got a new exchange on the market. So there's now, I think there's 3 major exchanges now. It's called btcmarkets.net, I believe. Yeah, btcmarkets.net. But they do require a minimum of $500 deposit, which kind of off-puts some people, but they've got the normal banking system intakes through BPay and things like that. And the other thing that's interesting, which I got a notification on my phone from last night, is one of the banks that I'm with decided to implement, or is starting to implement, that instant sending cross-bank. So within 10 minutes, they're supposed to have the money from one account to another, which I think has been pushed a lot by the fact that we're developing a technology which will allow that instant send without an intermediary having to wait 3 days for an interbank transfer.
You just bringing up Ripple, I know that some people are big fans of that. They don't understand that, it's centralized, and well, they don't care because they're just trying to make more Bitcoin anyway off of it. Simon brought up a very important point and I have brought this up before too, that it seems like in some people, they just have to do something with their Bitcoin. They just can't hold. Holding is actually doing something, people. You might not think you're doing anything, but you are. You're just being patient. You're waiting to 2020. So what we have is that most people cannot do nothing with their assets. They feel like they have to do something. So like Nathan said, they buy Ripple. They feel like they must diversify. They have to get into things they do not understand. And we see it happening in Australia. We see it happening in Korea. We got a guy here in Hong Kong tell us he sees it happening all over the world. I guess it just is human nature. And I don't know. I don't know what to say. Have a strong hand, people. You might feel like you have to do something, but you really don't. You're doing something by holding. Trust me on that one. All right, Simon. Real quick, you were telling me the other day. Actually, I guess we were tweeting back and forth. What's going on at Back to the Future? There's something new. There's something new you were talking about.
So Bank to the Future, we've been working really hard on our licenses. We've been at the regulatory stuff for 7 years now to launch our secondary market for equity tokens. And what that means is that we're in a regulated environment. We've, over the years, we've invested in some of the most valuable companies in the sector, and we have about, four unicorns in our portfolio. We've got companies like Bitfinex, Bitstamp, Kraken, BitPay, BitPayzer, many of the household names, and over about 100 different companies. We've been working on being able to take the equity of those companies, tokenize it, and be able to trade that in a compliant-driven way. So that now, if people want to actually, eventually, once we succeed with this, then we should be able to create some kind of index of Bitcoin blockchain companies, fintech companies, it's just another way. So rather than, many of the companies, they're going to have choices of what they do throughout 2018. I don't think any of the companies are going to IPO. I think IPO is just disrupted for our industry, at least. Anyone has a desire to go through that process of listing on NASDAQ or anything like that. But I believe that they do want to use, the blockchain and some kind of technology to be to access capital markets in the future. So we've been working on our secondary market for private equity, using tokens and blockchains as the mechanism in order to settle between those trades from one qualifying investor to the other. So we're really excited to be able to bring that to market, and we look forward to. So Bloomberg covered that recently, which is why it got a bit more attention than what we've been doing in the past. And in line with that, we're launching a token to actually power the banktothefuture.com platform, which is around a rewards and membership token to actually incentivize more transparency in markets, so we have better investor relations, more due diligence, and getting people involved in the process of conducting more due diligence research and analysis on these. So we're pretty excited to do that. And you know, we're bringing a compliant. It's reached the phase right now. If you look at ICOs that are being shut down, SEC actions, they're clearly stating what this market will look like in the future. And we're kind of hitting a crossroad in this token market. Tokens aren't going away. They're here to stay. They're going to look, pretty different in the future. And as the regulations get tougher, well, like all the other regulators tend to follow the SEC once the SEC makes their announcement. So the SEC has done their first few enforcement actions on ICOs, saying these are securities, and then other regulators will follow. So at that point, we have two choices. Every broker-dealer, every bank, every financial institution is looking at doing something in this market right now. You've got, large established public companies. On Bank to the Future, we've had public companies which are doing, ICOs, and they need some kind of regulatory framework around that. So we kind of have two choices. One, there will be the completely anonymous, illegal ICO market where, it kind of looks a bit similar to what we've got today. And that will continue and that will grow. Just like with Bitcoin, you have an unregulated and regulated market, and both are booming because both offer different user cases. But when the regulations come through, we're either just going to give all the business to the banks and the stock exchanges and the traditional players that all laughed at us over the years, that was telling us we're crazy, that never believed in this stuff, and now suddenly they're all showing up because there's enough money in this sector for them to actually react. Or we're looking at Bank to the Future, making sure that we have a platform that actually meets some of the regulatory requirements, that meets some of the transparency and disclosure requirements, but at the same time, it was built from a team that understands what it means to be a Bitcoiner and understand what it means for this industry. At Bank to the Future, we've always been about not funding companies that allow banks to commit fraud and crime cheaper using a blockchain, but we've always been about facilitating and supporting the disruption from these new technologies. So you're gonna see that evolve throughout 2018, and so we're making sure that we've got that structure that a lot of as the regulations get tougher and tougher and tougher, the sector can continue to grow and self-fund itself from within, because that was the major changes of ICOs to me. While ICOs, have so many problems, so many challenges, the reality is the net effect that they produced in the end is they took the market over this $500 billion with Bitcoin, because we created a mechanism for innovation being able to self-fund itself from people that actually believe in the innovation, no matter how crazy some people think it is. There's a community of people that thinks it's good, and they can bring that to market, and therefore we created a self-funding mechanism. And that's why we saw, in my opinion, massive growth in 2017. It was because the innovation was also being self-funded from within the community. And we saw, very much these Bitcoin and everything underneath it play out, where Bitcoin took the role of digital gold, and then lots and lots of other alts and alternatives are playing the roles of trying to solve different niches. And really, at the end of this, we're all going to be completely interoperable with atomic swaps and all sorts of stuff. So really, we do have to become more used to the fact that there's going to be millions of tokens. They are going to be interoperable, and a lot of them can help drive adoption as for this one sector that is just growing and growing and growing, self-funding, and requires no. You don't need to go out there and try and get a bank. In the early days, the Bitcoin companies were trying to get their funding, and then they had to go to banks and stuff like that, to bankers, because they had the money. But now the industry has its own money. And we can grow this little mechanism, this economy that exists outside of traditional finance, which I'm really excited about.
Oh yeah, real quick, pound that like button, everyone. Nathan, yes.
Sorry, just can I just ask a question or two of you from in regards to that last statement? You were saying in regards to the ICO market and things like that, Bitcoin, or within the ecosystem, there's so many other options that people could do if they wanted to make money off it. Obviously, we've seen people starting to fork and taking percentages of that, or changing the fork so that they get a percentage of the mining reward and things like that. Do you see that as a way that we could be moving in regards to, instead of starting a new ICO and getting direct funding through an ERC20 token, and creating a new something based on a Bitcoin or a blockchain like that, because there's that option, there's colored coins, etc. Would you see that as a way we could, or that could be adopted and moved into?
So in terms of hard forks,
yeah,
I think we're going to see tons and tons of hard forks throughout the next year. But one thing we have seen, and maybe this will change, I'm not sure, but we've seen every hard fork be less effective than the last. So you had the big one with Bitcoin Cash, which had immense financial and people behind it that actually could execute. Then you had Bitcoin Gold, and Bitcoin Gold was like, okay, well, I got a load of free money on Bitcoin Cash. That worked out for me. Now let's have a look at another one. And then I think the last ones, I haven't even known what they are or what they're doing, and I haven't even bothered to try and figure out how to access them. So they seem to be getting increasingly less effective. I know that we've just started to see them in Ethereum now. And we'll probably start to see them in all the other protocols moving forward. Whether this, I guess, if you can take kind of replicate what happened with Bitcoin Cash, where a credible team with large financial resources gets behind a hard fork, maybe we can revert. Maybe that trend can actually be reversed, and it becomes a mechanism for free distribution, free marketing. I think all the exchanges and wallets have had to think about how they automate a lot of the processes of adopting these hard forks, because the challenge with these hard forks is that there's always one or two people, even no matter how obscure the hard fork is, that they're willing to threaten the exchange if they don't give them their money, and sue them, and all that type of stuff. So it creates a very interesting legal challenge, but maybe it will be a new distribution model. I'm not sure. I didn't forecast what would happen with hard forks in 2017, and I'm probably not going to be able to forecast what will happen with them in 2018, because this is the real dynamic part of the industry that just throws these curveballs and surprises at you. And at the time, they always lead up to lots of FUD and people saying, oh, Bitcoin's over, Bitcoin's dead, Ethereum's over, Ethereum's dead, or whatever. But at the end of it, it turns out that just through this market mechanism, somehow it seems to make everyone a lot more money, even though throughout this controversy. So it's just a very interesting observation. But I am, the colored coins and these things, they never actually got the adoption that they deserve for whatever reason. Ethereum was the one that got the adoption for the smart contract. But certainly I see a lot of competition that's going to be coming through for Ethereum. Ethereum is going through the exact same cycle that Bitcoin went through. They said it's the biggest, it's the baddest, it's the best technology, it's the best thing you've ever seen. And then suddenly it starts hitting these scalability issues, and everyone starts complaining about the technology and the scalability. And the reason it's simple, people, is because it's getting adoption. Bitcoin went through the scaling issue because it got adoption. Ethereum's going through the scaling issue because it gets adoption. EOS and IOTA and all these things. Now, I welcome the innovation. I really hope that some really great things come from this. But they all seem to hit the scaling issue as soon as they get adoption, and then a new one comes along that hasn't got adoption and says we solved the scaling issue. And that creates a new wave, a new speculative opportunity, a new set of believers, new innovation. And at the end of all these cycles, just like with Ethereum, we now have people that see that there's disruption in the capital markets as a result of the only application that really got adoption on Ethereum, which is ICOs. And then you'll see the next thing with these other blockchains, and out of all this speculative frenzy, you get new innovation at the top, an increase in the market cap. And just really, really interesting things that come from that.
Scaling issues are because of adoption. People remember that. So if your coin is having scaling issues, that means people are actually using it. And so there are so few out there that actually have scaling issues because hardly any of these coins are being used. Remember, everybody's links are linked to below. The FundiAU, Simon's, you can just check out the link section below. Always check out that. You can get t-shirts, Trezor, Ledger Nano, CryptoHWWallet.com. Simon, there was something you brought up at the very beginning that reminded me of something that I have not heard you talk about yet. You talked about Bitfinex being part of the portfolio. Do you have any thoughts on the Tether situation?
I got to be very careful because I'm privy to certain, information as a shareholder.
Yeah.
But all I can say with Bitfinex is it's been our most successful investment. If there was, and I have no way of actually knowing because I'm not within the team, I speak to the team regularly. We've been working on various projects. But if there was a big, gap in the number of US dollars backing Tether, within 2 months, profits, Bitfinex could plug that gap in a second. It's the growth rate of that company is absolutely insane. And the people behind it, I think they're very smart people. Phil comes from a Wall Street background, and I think that's why Bitfinex at the moment is the exchange which is handling all this volume, and can handle the volume. And has really, been built to scale. But Bitfinex is a different, again, it serves a certain purpose. It caters for a certain market. They're looking to do less in the US market, obviously, because they've had banking challenges, and these banking challenges, it's a very tricky situation being a business in this sector, because the banks don't want you to go out there and tell everyone which services you're using, because they're kind of happy to serve, but they don't want that fact advertised. So it puts people in a very tricky situation where you might want to give certain information, but then you might lose the entire company as a result of disclosing the wrong type of information, because there's so many conflicts and there's so many challenges in this intersection between traditional finance and new finance. And the exchanges, they're the most exposed to that, because they are dealing with the intersection between traditional finance and new finance. Me personally, I don't have fear for the investment. The company is performing incredibly well. I believe it's run by competent people, but I don't want to do the Roger Ver saying that the Mt. Gox was solvent or whatever, when actually we don't actually, only the company knows what's actually happening within those that's ecosystem. But to me, it just looked like one person did an incredibly amazing job, probably a competitor of some sort that had of spreading something that is very, not really fact-based, and then it got completely wild and out of control. But in the whole time, Bitfinex's volume just went up and up and up and up and up the whole time, and the exchange still stays up. It's become one of the most reliable exchanges out there.
Yeah, you actually saying how well Bitfinex is doing. That's good to remind everyone that in fact, if something went wrong with Tether, they could bail them out. Basically, I guess. You're very high on Bitfinex. It's great to hear that they are. I don't know that much about how great they're doing. I assume that all of these exchangers are making. I mean, the volume is so high, but it's good to hear. It's good to hear. And yeah, as the viewers can tell, I didn't go over these questions beforehand with Simon, but he is, I don't want to put you in such an uncomfortable position there either. So very, very good answer.
You should take everything I just said with a grain of salt, because I am a shareholder and I do have a vested interest in Bitfinex succeeding. So take that information as you wish.
Yes, everyone. A very honest man there. Thank you, Simon. All right, Nathan, I keep on cutting you off there, man. You have some more? I think you had something else to ask Simon or something like that, or?
Yeah. Sorry, one of the group chats I was on mentioned a question they wanted to ask. Give me 2 seconds just to pull it up. I know I'm jumping around, sorry, but back to exchanges, a very brief one. During the last bear market, CEX.io, they were the ones who ran one of the first mining pools. You may be familiar with them. They actually, during that period where nothing was happening, they delisted Feathercoin and all those alts, and then they basically pulled their whole operation of exchange down to just Bitcoin to fiat. And now they've started adding, first they added Dash, and then they added, they kept Litecoin through the whole thing. First they added Dash, now they're adding, I think they're adding a whole stack of other ones now. It's just kind of funny. Anyway, so what someone asked for Simon was, what's the decentralized essence in regards to Bitcoin? Is it still alive? I've got my own opinions here. Is it purely a centralized model, or, with all the mining and everything that's happening? Because in my opinion, we've got 3 different areas of Bitcoin. We've got the exchange and the use case. You've got the miners and you've got the devs. Those 3 areas balance out. Even if one area holds a majority, the other area can fork off or do whatever at any time. But they wanted to know your thoughts, so...
Sure. I share a similar. I share your thoughts as well. It's exactly that. So, firstly, Bitcoin, without a doubt, is the most decentralized cryptocurrency we have. So anyone that says I've got a more decentralized version, they're just lying. And there's nothing more decentralized than Bitcoin. Does that mean that Bitcoin is fully decentralized and fulfills the original criteria of how decentralized this could be? Absolutely not. So Bitcoin, and we have proof that Bitcoin is decentralized, and I'll give you the proof. For the last 3 years, the developers wanted to take Bitcoin in a certain direction. For the last 3 years, the miners wanted to take Bitcoin in a certain direction. For the last 3 years, the users wanted to take Bitcoin in a certain direction, and the companies wanted to take Bitcoin in a certain direction. None of them got their way, despite the fact that they had incredible amount of resource, incredible influence. They may have, we had Roger that controlled a certain part of the media at Bitcoin.com, and Barry Silbert that controlled a certain part of the media at CoinDesk. And so these 2 people, these 2 different thoughts of how to do it, led to hard forks because they could not control Bitcoin. The miners got behind what was their favorite, fork, and the businesses got behind their favorite fork, which Segwit 2x didn't actually turn out to happen in the end. And so we ended up with 2 or 3 coins. Well, I mean, Bitcoin Gold wasn't really part of that debate, but we ended up with 2 coins. And that's how we know Bitcoin is decentralized, because they all tried to get their way and they couldn't. No one controls Bitcoin in its, so then someone comes along and says, well, isn't all the development that, the most influential developers are all work for one company called Blockstream, and Blockstream is funded by an insurance company in the UK. As one of their primary investors, and therefore is the bank trying to co-op, other banks trying to co-op the development? Well, let's say they are. Let's imagine that they actually are. I mean, firstly, the developers behind this, there is a certain degree of decentralization, but then there's developers that have much greater opinions and much greater influence in terms of overall. And they may work for a company, and so there's a degree of centralization within the development. Within the mining, there's certainly a degree of centralization there. Over time, all the innovation has gone to the place that can produce the chips and produce the machines at the cheapest rate and get access to the cheapest electricity. Or it's moved a lot over to China, and then you have competing forces in countries like Iceland and things like that, which are able to have certain advantages, and Canada as well. And so you get these kind of, you know, centralizations within the mining ecosystem. And then you have a coordinated effort by businesses that all go to a conference run by CoinDesk and Barry Silbert, and they all get together and say, hey, we need cheaper transactions to settle. And so they all put together an agreement of how they move Bitcoin forward based upon their perception of what's right for it. Now, here's the key thing. Every single player in Bitcoin has their own incentive mechanism. And we shouldn't discourage that, because Bitcoin works because of the incentive structure. Everybody is trying to maximize their own self-interest. And that's the definition of a free market. If you look at the classic Adam Smith invisible hand free market, it's about pursuance of self-interest. And so everybody within this ecosystem pursues their self-interest. But guess what? The way that Bitcoin's infrastructure was designed is the miner's self-interest may not be exactly the same as the developer's self-interest, and the developer's self-interest may not be the same as the business's self-interest, and the business's self-interest may not be the same as the user's self-interest. The users might want censorship resistance, and therefore they're willing to pay a premium for privacy and censorship resistance, whereas the businesses might just want, you know, the most centralized way of settling cheaply, because they've got millions and millions and millions of users and they just don't want to do everything on chain, and therefore they might benefit from a degree of centralization. The miners are trying to maximize the block reward, and then eventually have to move over to transaction fees as the block reward gets smaller, and they're trying to manage, okay, where is, you know, do we need to keep transaction fees down so that the block reward is higher, or do we need to, you know, and they're dealing with their own internal economics. The developers are looking at, they're trying to interpret, what does the Bitcoin community actually want? Do they care more about censorship resistance, or do they want Bitcoin to be a currency to buy ice cream? You know, or do they want, you know, do they care about, and everything that they do has an impact. So what we've got is this perfect array of chaos with geniuses in each of these different areas, some of the most intelligent people in the world that are pursuing their own self-interest in their little micro part of the Bitcoin community. And just like, you know, in the global macroeconomics, you have China and America, where China is producing all the goods and shipping all the goods out. And, you know, America are the biggest consumers of those goods. And America has the financial system and Wall Street, and they create bonds, and therefore China is heavily invested in American treasuries because they own half of the government debt. And therefore, if China, you know, committed some kind of political war with America, then the value of their treasury bonds and their investments would completely collapse, and they'd lose a part of their economy, which they're shipping their goods to. And therefore, and then you add Russia to the mix, which is producing a lot of the oil, and then you have the Middle East, and you have these different pockets of self-interest and centralization with these nation states. But they have to figure out how to not bomb each other and kill each other, because their economies rely on each other. And then you have overall the global macroeconomic effect is that you have some kind of decentralization there, as long as, you know, but with countries that are more influential. Now, in Bitcoin, you kind of have a similar thing. You have the most decentralized thing I have ever seen. But someone could complain about the pocket of centralization that exists in development, and the pocket of centralization that exists within mining, and the coordinated action from businesses colluding to get their own self-interest. And then you could get confused thinking that Bitcoin overall is centralized. But as long as those alignment of interests are different, then you have this quasi-decentralized network. And the Bitcoin has achieved that more than anything else that exists in the world today. And so I believe that Bitcoin is decentralized, with lots of areas of improvement for the pockets of decentralization, you know, the pockets of centralization that can be decentralized. But the answer is that anything that can move fast, anything that can change rapidly, anything that gets very large consensus for a hard fork, based upon the fact that lots of people lost money in a certain investment, like it did in Ethereum, means that there is a much, much greater centralized force within that network than there is in Bitcoin. So I challenge anyone to show me something that's more decentralized.
Yeah, you just brought up a great point there. Bcash is definitely more centralized than Bitcoin. I mean, they had their hard fork unanimously, basically.
It certainly is, but you also have to remember that Bitcoin started the most centralized thing you ever had. You had Satoshi, had the wallet, was doing the mining, controlled the development team, and all of them start this way. It doesn't mean that they can't eventually get to that point. It's very hard. It's incredibly hard, and Bitcoin was just a freak that will, in my opinion, never happen again. A set of circumstances that can't be repeated, that required everything that happened to Bitcoin over its history to make it what it is. But if someone wants to try and replicate that, to me, it's a feat as hard as trying to recreate the internet and get everybody to create new websites on their new version of the internet that they think is technologically superior to the one that people are using.
Yeah, I agree. New version of the internet, not going to happen. That's what the comparison is. I like that comparison. You bring up some people, and that was great. Everything you just said. There is this aspect of the community, of the overall cryptocurrency community, that feels like right now that cryptocurrency needs to be used for ice cream transactions, as you said, or coffee transactions, and so. Segwit has started. It hasn't been adopted by everyone yet. We're hearing a lot of complaints about Segwit from the same people who want coffee. First, I'm going to ask you both about this, but Nate, the FundiAU, do you think the time has come for cryptocurrency to be used in everyday transactions, or are we just not there yet? I mean, I feel that we're not there yet, but what do you think, the FundiAU?
Yeah, so Bitcoin's market cap is nowhere near the market cap of gold yet. Until it gets to that point, it's not an international for everyone. I'm sure a small country could take on that. But really, at the moment, if you wanted to buy coffee, if you were that desperate to buy coffee, you can go to any centralized service and use a centralized off-chain version to buy your coffee. We've got CoinJar here, which has a card. We've got Coinbase, which has a card. You've got Zappo, I think it's Zappo in... I forgot where that is, like Switzerland or something. There are lots of options if you really want to use your Bitcoin for coffee. Right now, we're not in that position. We are still in a very early adopter area of Bitcoin. And until everyone, including your grandmother, is holding Bitcoin, I don't think we're quite in that where we want to be using it for day-to-day transactions. And it still doesn't have the applications still aren't at that point where it's comfortable for everyone. In the last 3-4 years, we've moved from Windows 98 to XP. We're a lot more comfortable, but we're not quite yet at a very smooth workflow. If people are still able to send things to the wrong address, by mistake and things like that, the integration isn't quite there yet.
Yeah, excellent point about it. People want to use cryptocurrency to buy stuff at daily transaction. There's centralized third parties that can make it happen already. I think that's a really good point. Simon Dixon, what do you have to say about all that? And have you been hearing this FUD about Segwit that I've been hearing?
So firstly on cash, do I think the world is ready? Who knows, but I'm grateful that there's people trying to push it. Bitcoin has clearly a group of the most vocal core developers have clearly stated that they believe that censorship resistance and store of value is on their highest list of goals when they're deciding what needs to be developed next. And they've clearly stated that they believe there's unlimited demand for on-chain transactions, and therefore they need to develop something, which was Segwit and Lightning, in order to take transactions off-chain, so that you can have unlimited scaling off-chain And that was their solution, because they, you know, they believed that the community wanted store of value you know, and that's their belief. Now, if someone wants to come along and hard fork Bitcoin and say, my whole goal is to turn Bitcoin into cash, then go for it. Make the changes, make the tweaks you need to do, and try and create cash and try and create digital cash, because Bitcoin right now is not digital cash. Let's face it, the user experience of making a transaction on Ethereum right now is a more pleasurable experience than making a transaction on Bitcoin, but it's different risk profile. I'm not going to store, you know, I'm not going to store my value in Litecoin. I'm going to treat Litecoin as something speculative that I believe has a future in, for whatever reason, is as a test net for Bitcoin, or whatever reason you come up with. Then you just have to understand that it doesn't mean you're replacing your Bitcoin for Litecoin. It means that you're deciding to reallocate your risk profile. It means that for those that are exchanging their Bitcoin for Bitcoin Cash, they're making a decision, and their decision is as follows. They're making the analysis that the digital cash is either going to be more useful to them or be worth more than digital gold. And that's their decision. That's it, purely and simple. Because this set of developers have said they want to create digital gold, and this set of developers have said they want to create digital cash. Now, the reason that I still hold a vast majority in digital gold is for the following reason. Is because I believe that humans, and firstly, I do transact in Bitcoin every single day. I don't just store it. I use it every day. It's my preferred payment method. But you are also wrestling with the fact that the convenience of sending it also means that in 2 or 3 years' time, you might have just bought you might be the Bitcoin pizza guy. And so that kind of psychology encourages savings rather than encourages spending. So digital gold encourages savings. It doesn't encourage spending. Now, if you could create a separate product, a separate blockchain, a separate coin, that all it does is encourage spending, then my personal belief is that you don't have a fixed money supply, and it's not an investment, because great cash is not a good investment. I don't invest in, you know, I hold my money in US dollars because I don't think the value of it is going to go up or down. I just think that I could buy bread and I could buy water, and more people in the world are going to accept that US dollar when I spend it than anywhere else in the world. So good digital cash is not an investment, in my opinion. If it is an investment, what it does is it means that if the value of that cash keeps going up, people will stop spending it and they'll start hoarding it, because they believe, they have an expectation that if I hold it, I'll be able to buy more goods in the future. So to me, this whole debate was, well, you know, you can still use this payment mechanism, and there's nothing better than generating wealth through your digital gold and being able to spend that without actually having to enter the fiat system. That's fantastic utility. It's great. But the reality is that no one wants to be the Bitcoin pizza guy, you know, that spent 10,000 Bitcoins on 2 pizzas and goes down in history as, you know, the one that lost 10,000 Bitcoins to buy 2 pizzas. And everyone's going to have that reality if the economics of Bitcoin play out. So in summary, create digital cash. My personal belief is that digital cash won't attract much investment, and it won't make a good investment, because it should be stable. And guess what? There are already governments all around the world that exercise inflation and deflation policy in order to try and create a stable currency. Many of them fail and some of them succeed. If you can do that on a global scale, in a decentralized way, then that is just an incredible achievement, an incredible thing to actually, and a worthy goal. So I look forward to seeing digital cash in the future. My personal belief is that it won't make a great investment. It will be, you have to change the inflation and deflation based upon the economics of the world, just like the national currencies create a monetary policy to try and create a stable currency based upon the macroeconomics of that economy. But so that's my personal opinion. But you know, these are all worthy pursuits, I believe, and I want to see them all happen.
No one wants to be the Bitcoin pizza guy. Pound that like button, people. I love that line. All right, the FundiAU we are getting close to the end of this show here, so I'm going to give you the floor to say everything that you meant to say and any conclusionary remarks, and take it away, the Fundy.
Yeah, so just adding to that last little bit. Yes, I don't mute. Just adding to that last little bit, which you said there, and that's the thing. All the cash systems are centrally controlled anyway. So while you decide that it's a safe place to store, or most people are currently viewing it as a safe place to store your wealth, look at what happened in 2008. Look at what happened to Zimbabwe. I've got a $100 trillion note with a $10 billion note that was printed just a couple months earlier. That's a huge change in value in a very small space of time. And just in regards to Segwit, while the moving average is still sitting around the 8-9%, I'm just having a look at segwit.party/charts. And we peaked at 12.25% over the past week with a maximum block size being 1.5 megabytes, which I think shows you that we are getting that adoption. Cash could be an option way down the line, but right now it's not needed. And as you said, it doesn't really add value, not as a savings account anyway, which is, I think, how a lot of us view Bitcoin currently. And final remarks. I'm really proud to see a lot more Australians getting into it, a lot more talk about the cryptocurrency space in general, and getting into Bitcoin, getting into getting the security they need in order to safely store their coins. And I'm just hoping that a lot of these people will stick around when there comes a correction, when the futures market decides to do something wacky. Yeah.
Well, awesome. And thanks for reminding us about the Segwit.party website. That's what it is, Segwit.party? Is the URL? Yeah, I remember that. I hadn't talked about that for a while. It's if you want to keep track of what's going on with the Segwit numbers, that's an excellent statistical source right there. And yeah, I love Australia. And come on, guys, get on the ball down there. Get into Bitcoin. Don't be like South Korea and get all bubblicious and day traderlicious with your alts and everything. And I look forward, hopefully in 2018, to coming back to Australia. Simon Dixon, your conclusionary remarks, anything that has been left out that you wanted to add?
I forgot to discuss Segwit. So with Segwit, it's kind of like the banking system right now. Banking is built upon the most disgusting, horrible, oldest rails you've ever seen. But the banks never upgrade because they're just so scared of breaking things. So you can imagine within all these exchanges and wallets right now, they've their websites are going down left, right, and center. They don't know how to handle all this volume. They're dealing with all these situations. There's a new cryptocurrency coming out every second. They're scared. They have to move fast. They have to move to the next cryptocurrency. Whichever exchange gets all the gets listed cryptocurrency first, gets all the volume. And if you get all the volume, that becomes an incredible source of revenue and profits for the exchange. And they are just firefighting left, right, and center. Our industry is under major scaling issues. We've got bankers all around the world leaving their jobs in order to work in this industry. You've got fund managers all around the world looking at this industry as the next asset class. You've got users all around the world that are hearing about Bitcoin for the first time and are saying, hey, could I use that to send some money from Hong Kong to Philippines for my remittance? You've got people all around the world entering, oh my God, my friend has made 40% returns in the last few months. I need to get on board. Oh my God, fear of missing out, all this stuff, everything that's coming together. And all these businesses are trying to figure out, how the hell do I deal with all this stuff? And then you tell them, oh yeah, you've got to upgrade to Segwit. And it's this hard challenge to do. Many people wonder why a tiny little wallet can upgrade to Segwit, yet Coinbase hasn't. Now, while it may be for political reasons, just from the perspective of seeing inside a business, it's also major. When you're dealing you know, when you have a technology that's being used by 100,000, you know, millions of people a day, making a change is exponentially harder than making a change for a wallet with a few people and being able to test it out there. So, you know, it's a question of, right, this superior, you know, this technology exists. Everyone, but it's very interesting that for the last 3 years, all these companies have been saying, we want lower transaction fees, and then there's a way to do it, and they're kind of dragging their toes a little bit. But to me personally, I believe it's a function of not that they don't want to use Segwit. There may be some people that have the political hangover from 3 years of arguing that has created a belief in their head about whether, or a stubbornness about whether they want to adopt it or not. But the vast majority are just like, this is in our planned roadmap. You know, a Bank to the Future, we've had things in the planned roadmap for 3 years that we'd absolutely love to do. We know it's essential, but it's just allocation of resources. And at the same time, the entire industry is scaling beyond, you know, everyone's facing hiring bottlenecks, the number of support tickets that are backlogged at these exchanges and wallets. And, you know, I mean, I've got a blockchain.info. I tried to use it and it took like a minute just for my wallet to load up. You know, we're going through these things, but there's going to be major infrastructure upgrades over 2018, 2019, 2020. And so it's just a patience thing. You know, I've never seen a new technology since the internet. And, you know, I wasn't really involved observing. I was a late adopter to the internet. I've never seen this live, and we are experiencing right now the most exciting time to be alive in financial history. And more change is happening right now than we've ever seen. And the entire world is participating. And that is one of the most exciting things. And everyone should, you know, really celebrate the achievement that this industry has done, the talent that this industry is attracting, and the change that people are going to see in decades and decades from now as a result of all these debates and all these arguments and all this trolling and all these things that we're doing, because all of us are aligned by a common belief that we all think that cryptocurrency can change the world and make it a better place. And if you are a profiteer out of that, if you're a speculator, you're adding liquidity. If you're a miner, if you're a troll, you're adding, you know, keeping people to a higher standard. I hate certain parts of this industry. There's things that I hate. There's people that I despise, you know, their tweets and stuff like that. But we have to remember here that we're all collectively working on one of the most important inventions that the internet has ever seen. And this has an impact on the largest governments in the world, the largest, most powerful financial institutions in the world. And this little experiment that started with a few people a few years ago is actually impacting some of the most power plays in history. And that is something to really celebrate. And I'm really grateful for the entire community.
Wow. That was awesome. That was a beautiful conclusion right there, people. I'm sure everyone is pumped after hearing that, ready to get on with their day over in Asia and Australia, ready to party all night here in North America after hearing such an awesome conclusion. So thank you, Simon Dixon and the FundiAU. You guys were great tonight or today or wherever you are. I'm Adam Meister, the Bitcoin Meister, the Disrupt Meister. Remember to subscribe to this channel, like this video, share this video. Check out the notes section below. Again, thank you, guests. Thank you, viewers. We're here every Friday for This Week in Bitcoin. And, of course, I do a new show every single day on this channel. So see you guys later. Pound that like button. Bye-bye.